Today we're going to go over 4 earnings reports for Oracle, C3 AI, MongoDB, and Casey's General Store. Ladies and gentlemen, welcome to Wealth Down. My name is Noble BM, and in today's video we're going to go over the earnings reports of 4 companies, and we're also going to do a bit of risk analysis in order for us to determine should we buy, sell, or hold these companies if we want to own them, or maybe we're just considering to sell them. So let's start with Oracle. They reported their earnings yesterday after the bell, and that was for the second quarter 2025. This period ended on November 13th of 2024. The company reported strong revenue and earnings growth driven by increasing demand for its cloud services and AI solutions. A couple of key highlights from the earnings report were that the total revenue for quarter reached $14.1 billion, representing 9% year-over-year increase. But as you can see here, their stock value fell almost 8%. Actually, it was 10% right after the reported earnings. Now it's starting to recover, but for now, Oracle is definitely in the negative for this week. Now, Oracle is up for the year, 55.05%. But let's also continue over their earnings report. Now, their cloud services and license supported revenue grew 12% to $10.8 billion. Their cloud license and on-premise license revenue increased by 1% to $1.2 billion. Their non-GAAP operating income was $6.1 billion, up 10% year to year, and the operating cash flow for the trailing 12 months was $20.3 billion, and the free cash flow of $9.5 billion. So they had a very good quarter. They beat all earnings expectations. Now, Oracle's strong performance can be attributed to several factors. So let's just go over them. They're actually 3: AI-driven growth, cloud momentum, and strong financial potentials. So the company is investing in AI, of course, who's not investing in AI, and machine learning, and it has paid off. Now, there is increased demand for its cloud infrastructure and AI solutions, but Oracle's supercomputer powered by 65,000, I believe it's 65,000 NVIDIA H200 GPUs is one of the world's largest and fastest to date. But I think Amazon is building one even bigger. They're building a supercomputer. So definitely keep your eyes on Amazon. Also, cloud momentum. Oracle's cloud business continued to grow rapidly. Their strong adoption of its cloud infrastructure and software solutions drives their growth. Now back to their financial position, Oracle maintains a strong and balanced revenue with significant cash flows. Now this allows them to perform further investments into future growth. If you take a look at their stock price, currently they're at $176, and it has been a strong upward trajectory in the recent months, driven by the company's strong financial performance and their position outlook. The stock currently trades at a PE, let's just see, of 46.59, which is strongly higher than the industry average. However, given the company's strong growth perspectives and robust financial positions, the valuation appears maybe justified. I would say maybe justified. So they have a earnings per share of 4.21, a price. Let me just do here a quick calculation. And yeah, that's actually at 48 PE, a 42 PE. So you know what? Let's also do a risk analysis. So is this a good buying opportunity? Because it did have a huge dip and now it's trying to bounce back from it. So currently there are at a RSI of 42, which is lower than the medium of 50, and I would consider this a medium risk. Actually, I would even go for a low risk. We at the 40-ish, or even here, I would consider a low risk. But I will leave it at a medium risk for now. Now, the MACD is currently on a let's just say a soft sell, and from here I would consider it a low risk. The PE ratio, let's just take this 46, which is higher than the industry standards of 25. I would consider this a much higher PE. Now, if we would take this into consideration, I would say that this is a high risk. The outlook, so let's just go quickly over the outlook there. Oracle's strong Q2 earnings results demonstrates that the company's ability to capitalize on the growing demand for cloud and AI solutions. The company's strong financial position, coupled with its focus on innovation, positions it well to continue growth in the years to come. While the stock may be overbought in the short term, which it did correct slightly now, the long-term outlook remains positive. So also if we take a look at what do the analysts say for the forecast, well, they are at a strong buy, and you would beat the S&P 500 with a 11.17. Let's just take this into consideration that a year-to-year expect would be a return, or let's just say a yearly return of 11.17%, which is above the industry standards of 8%. So this is what the S&P would return. So you would be roughly 3% over the S&P. So S&P return at 8%. So I would consider this a lower risk. So this is looking pretty good right now. We did take into consideration the PE ratio MACD. It also uses small dividends, so that's a positive for it. Basically, we just hold it, then this would still return. Let's see how, 39.14 dividend return. So a positive dividend return because the payout ratio is 39.14. So I consider this a low risk. Now, this is looking far too good for me for now, so I just may consider buying some Oracle at this price. Did have a good pullback. You can see it for, if you take a look at the complete here, this is looking really, really good. So let me hear from you in the comment section below. What would you do with Oracle? Is it a buy? Is it a sell? Remember, I'm not a financial advisor. Please don't buy or sell stocks based on what you see here. This is only educational and mostly entertaining purposes. So that's it for today's episode. Hope you enjoyed it. If you did, like and subscribe. Definitely come by the website. We did move the website. Now it's at Manhart Media, no longer at WealthDom. So the link is down in the description below. Definitely check it out. You're going to see all of the posts. Every data that I just talked about is in the blog post for each and every company. With this being said, thank you so much for watching. I know we'll be Stay safe out there. Catch you next time. Bye-bye. Bye-bye.